Okay guys, welcome back. This will be the last video of this part, of this indicator part. We're going to speak about two important, very important indicators I use every day for my strategy, for my trading activity, which are ICHIMOKU and MACD, moving average, convergence and divergence. I think the definition is this. Let's first speak about ICHIMOKU, which is maybe the most important. So, unlike what I said in the premise of this indicator part, I said that there is no indicator that can make an accurate forecast of the future. Well, to be honest, ICHIMOKU is an indicator that is made for this, to try to have a correct forecast of the future. Among all the indicators available, to be honest, available in the public library, in all the trading common library, maybe is, or without maybe, is the one that probably comes closest to a forecast. ICHIMOKU, I will not speak about his history. I mean, as usual, you can find everything free on the internet, and the common way to use it as well. So I will not waste your time to telling you something you could know for free. So ICHIMOKU represents a trend following. Is not an indicator. It's a system. It's a trading system. Okay, it's huge as an indicator. Anyway, ICHIMOKU cloud. This is the correct name. Is a trend following indicator. To be honest, it's not an indicator. It's a trading system. Okay, it's a trading system with a variety of indicators that are similar to a moving average. The ICHIMOKU cloud is one of the few indicators out there, on my personal opinion, that can predict price movement. Which is the advantage of this indicator is the fact that it offers a unique perspective of support and resistance. Okay, so how to read the ICHIMOKU cloud trading system? For many traders, the ICHIMOKU could seem complicated and harder to understand, but believe me, once you get familiar with how to read the charts, you will find a lot of great trading signals. Okay, so first of all, ICHIMOKU cloud. In ICHIMOKU cloud you can find the cloud, first of all, obviously, which is the green part. We'll explain later how what the cloud means. Then you can find three moving average. Okay, the first one, I will not speak with the Japanese original name because I don't want to miss the pronunciation, so we'll use the international English name. This green is the lagging line, and these two, the red one is the conversion line, okay, which is like a fast moving average, and the blue one is the baseline. Okay, so let's first speak about the ABC of ICHIMOKU. So first of all, trigger. You can use it as a trigger when conversion line cross the baseline. The conversion line is considered as a short-term price movement. Just another thing I didn't tell you. The ICHIMOKU indicator is standard. You can find standard on TradingView. Okay, so 926 52 26. Okay, so the conversion line is a short-term price movement. Okay, because it only measures 9 candles. Okay, 9 period. So if the market price is above the conversion line, okay, like in this case, okay, this will suggest a short-term upward momentum, short-term, okay, bullish movement in a short time. Obviously, if the market price is below the converse line, like this example, okay, this suggests a short-term downward momentum, bearish. Quite simple. The baseline, so the blue one, represents a medium-term price movement. Just because it measures more candles than the conversion line. So if the market price is above the baseline, this suggests a medium-term upward momentum. If the market price is below the baseline, as always in this case, or in this case as well, okay, this suggests a medium-term downward momentum, medium-term. Okay, so just like a normal moving average. Okay, fast and slow. So when the fast cross the slower one, this can suggest a changing of a trend. One of the most popular strategy among ICHIMOKU Cloud users is the crossover trading strategy, as I just told you, which is the crossover between the conversion line and the baseline. You're probably asking why not use normal moving average. This because ICHIMOKU Cloud offers support and resistance as well as stop loss levels, unlike normal moving average. When the moving average, like in this case, is relatively close each other, like in this case, as you can see, we can consider a ranging market, so we cannot trade here. Okay, so now let's speak about lagging line, which is this green line. First of all, what is the lagging line? The lagging line basically represents the price, in this case 26 periods before, 26 periods back in time. Okay, so it indicates the evolution of the price in relation to the previous price action. So it's quite easy to understand what for what we use this kind of indicator, which the lagging line is when the lagging line is above the current market price. So here, for example, okay, this indicates that the current price are higher than the previous prices. Okay, so this suggests a bullish trend easily. Instead, when lagging line is below the current market price, this indicates that the current prices are lower than the previous ones, like in this case, okay, here the lagging line, here the price. Okay, so when you see this this part of lagging line, this means that we are here, okay, with the current market. But as the lagging line is below the market price, okay, this suggests that we are on a bearish trend. When lagging line is near the current price, okay, like here, for example, this indicates a ranging market. So we have to wait for a strong movement usually to trade. Let me remove all the drawings to speak about the cloud, which is maybe the most important part of all the ICHIMOKU trading system, because within now we are speaking about a simple way to read the indicator, but is quite common. This is quite similar to the moving average theory. And now we add with ICHIMOKU, we add the cloud. So how the cloud must be read? Kumo, which is the original name of the cloud. First of all, Kumo represents the a dynamic support, a dynamic support and resistance level. So the longer the price stay above the cloud, okay, the stronger the trend is. I repeat, the longer the price stay above, as in this case, the cloud, the stronger the trend is. You can easily see that when price strongly goes down, move down, the cloud, the trend is changed, as in this example. Okay, so let me take a larger time frame. So, how to read the cloud? When the cloud is wide, for example, in this case, okay, It's a huge part. The support or resistance level means that the support or resistance level is strong. Okay, and so for example, this you can see that the price rejected this area and goes up. Okay. When the cloud is thin, like in this case, this means that the support and resistance level is weak, very weak, as you can see in this example. Okay, as you can see, this level is not so strong, so price always break it. Okay, what do the Ichimoku experts say about the operativity with this indicator? First of all, they say that you should never trade inside the cloud. So when the price is inside the cloud, just because here is where support and resistance meet, or simply is what we call the ranging market. So it's not a good area from which open the trade usually. Okay, usually. Okay, I think you already understood how does this indicator, this trading system work. But anyway, let's make some example, because it will be useful to understand my strategy. So how to read Ichimoku Cloud trading signals? So let me remove and looking for an example. Obviously, as all the indicators, we have to check these signals on a higher time frame. But as we will see, we will use Ichimoku on the 15 minutes time frame. But as you can see, there are so many rules to be confirmed. Okay, anyway, so just an example. When the conversion line crosses above the slow moving baseline below the cloud, it is considered weak buy signals, and vice versa. When the fast moving conversion line crosses above the slow moving baseline above the cloud, it is considered a strong buy signal. Okay, so let me check an example. As you can see, so we are above the cloud, for example. So we are looking for a cross line to cross from down to up. Okay, the baseline to a strong movement, like in this case. Okay, when a cross line crosses from up to down, the baseline above the clouds, this is weak. Okay, I hope you see that this is weak signal. Okay, in fact, as you can see, trend is coming. Yeah, trend is changing. Sorry, but it's not so strong. So after a a little swing, price then keep on trending bullish. Okay. Vice versa, when we are below the cloud and we see cross line cross from down to up, the baseline, this means that trend is weak. Bearish trend is a bullish trend is weak. As in this case, the bullish trend is never began. Okay. Instead, if we see the cross line as a few days later in this case, so you see first cross line crosses from down to up the baseline, then immediately we are on a daily time frame, so 2 days later, so 2 candles later, cross. Okay, from up to down, we are below the cloud. Sorry, the lagging line is below the price. So let me first remove. So this is a very good signal. Okay. When we are talking, when we will speak about strategy, we will see how this kind of signal could be very powerful. Okay, inside a good strategy, we will see where to set entry price, where to set stop loss, take profit. Okay, but basically this is a good way to use correctly Ichimoku. Last but not least, we're going to speak about MACD, MACD. Okay, the indicator options are the standard ones you easily find on TradingView. So 12, 26, and a 9 period. I will not explain what does MACD means. This meaning moving average, confluence and divergence, something like that. Obviously, you can easily find everything for free on the internet if you want to know so many other things about this indicator. I just want to explain to you how I use for my strategy, and it's quite easy. This is the only indicator I use for the trend. What does it mean? I don't care about oversold, overbought area. I don't care about crosses. These are moving range as well, so I don't care because I have Ichimoku. I have the exponential moving range average as well to use for trigger. I use MACD only just to confirm a changing of environment, a changing of trend. Okay, and where trend is changing on MACD here. Okay, when both the moving averages, both these lines crosses the zero line, the middle line. Okay, so in this case as you can see, MACD confirm that trend is changing from bullish to bearish. Okay, why not here? Yes, it's just a confirm, I repeat. Okay, I'm not use it as a trigger. Okay, so this means that trend is changing from bullish to bearish. Okay, as you can see, price stays below the cloud for a long time. Then here something happen. Okay, as you can see here. Okay, the both moving average, the both lines crosses the middle line, the zero line. Okay, about more or less here. Okay, and as you can see, price goes up to the cloud. Okay, and then yeah, a little bit of uptrend, of bullish trend began, but it's not so so strong. Okay, but anyway, it doesn't matter. Okay, that's it. That's everything I need to say about MACD. I don't use it for trigger. I don't use it for entry confirmation. I just use to understand, to have a confirmation about the trend. Okay. And even if a confirmation of a trend changing must be given from many others factors as well. First of all, lower lows and lower high. Okay, lower lows and lower heights. So as you can see, this is the first high, second high, third high, fourth, fifth. Okay, and this is a channel. Okay, with lows. This is one of the easiest confirmation, okay, for a changing of the trend, for a trend itself. Okay, so use MACD not alone as all the other indicators, but with the confirmation of the price. Okay, so we're finished, and we will see in the other video lesson. Okay, see you.